In Phase 1 of Single Touch Payroll, employers were required to report an aggregated total of year-to-date gross income amounts. With the advent of Phase 2 Single Touch Payroll, there'll be changes to the way that earnings and deductions are reported. They'll now be disaggregated and itemized separately when reporting through STP. This video will discuss the disaggregation of gross income amounts and how to review classifications where required. For more information, there will be links in the video's description to detailed articles on the subject. In Single Touch Payroll Phase 2, instead of reporting a single gross amount, you will now separately report gross, paid leave, allowances, overtime, bonuses and commissions, director's fees, lump sum W or return to work payments, and salary sacrifice. The preparation required to ensure gross amounts are reported correctly as per the new Phase 2 requirements can be broken down into 3 separate activities: reviewing pay category payment classification mappings, reviewing leave category payment setup, and assigning new classifications to salary sacrifice deduction categories. Reviewing pay category payment classification mappings. In order to ensure gross earnings are itemized and therefore reported in accordance with Phase 2 specifications, we will be adding a number of new payment classification options to the pay category settings. These new options will be available in the platform from the 9th of November 2021. When we release these new payment classifications, we'll also map the following system pay categories that we provide by default when creating a business to the appropriate payment classification. Please see a list of categories on screen that are also listed in the detailed article. This means that users won't have to manually update the classifications for the system pay categories, as we'll automatically do this on their behalf. Moving forward, any new business created from the 9th of November onwards will have the updated classifications by default. Additionally, shortly after the release of these new payment classifications, we will start publishing updates to any prepackaged awards with pay categories that need their associated payment classifications updated. This means that once users update their installed awards with the relevant update, no further action will be required by those users to ensure that the default pay categories associated with the awards are mapped correctly as per the Phase 2 requirements. Where businesses have created their own custom pay categories, these categories will need to be reviewed in order to ensure that they meet Phase 2 requirements. Please refer to our article in the video's description for a definition of each payment classification to assist you in determining whether the payment classification of any pay categories need to be updated. Then, from the 9th of November onwards and before the 1st of January 2022, you can commence updating each pay category accordingly. The payment classification for a pay category can be reviewed by first navigating to Payroll Settings, then selecting Pay Categories. From there, you can select a particular pay category and you'll be able to edit the payment classification at the bottom. Reviewing Leave Category Payment Setup. It's important to review the leave category settings used within a business, specifically the Payment Setup setting. This setting controls how a leave category is paid out when used within a pay run, and it's advisable to review it to ensure that it meets Phase 2 reporting requirements. To see the payment setup for a leave category, first navigate to Payroll Settings. Then select Leave Categories. From there, you can select a leave category and then scroll to the bottom of its options to check the payment setup. Each category includes a payment setup setting with the following options: Basic, Don't Pay for Leave Taken, Report the earnings for the leave taken against another pay category, and Custom. For the purposes of ensuring correct Phase 2 reporting, these settings will be explained. Basic. If this option has been applied, then when an employee takes leave, the result in the pay run is that there is no itemized related pay category associated with the earnings for that paid leave. Phase 2 reporting requires all paid leave earnings be itemized against the specific leave-related payment classifications, and the basic option does not do this. As a result, it's essential that users change the payment setup configuration for any affected leave categories using this option to instead apply the payment setup option called Report the earnings for the leave taken against another pay category. Report the earnings for the leave taken against another pay category. If you're already using this setup option, then we recommend reviewing that the associated pay category is one that fits within the itemized leave payment classifications. For example, if you're reporting all leave taken against one related pay category, this will definitely need to be reviewed and updated accordingly. Custom. This setting allows you to transfer leave hours to a specific pay category. Even though we're not assuming that all users have chosen to transfer leave hours to a specific pay category, we'll just advise that you should probably do so. It is advisable to map this to a specific pay category, which you can then use the correct payment classification for as per Phase 2 requirements. Also note that we didn't miss the payment setup option called Don't Pay for the Leave Taken. It's just that this option doesn't actually need to be reviewed, as Phase 2 reporting requirements only extend to itemizing paid leave earnings. Another thing to note is that for termination payouts, excluding death benefits, we have system pay categories that are automatically assigned in the pay run to the leave payout earnings. These will automatically be mapped to one of the correct payment classifications. Assigning new classifications to salary sacrifice deduction categories. In Phase 1, salary sacrifice amounts were not required to be reported. Instead, an employee's gross amount was reduced by any salary sacrificed amounts, and then it was that post-sacrificed gross amount that was then reported through STP. Reporting salary sacrifice separately is a new requirement being introduced in Phase 2, which means that the gross amount reported will be the pre-sacrificed amount. As Phase 2 reporting requires salary sacrifice amounts to be itemized, we will be adding 2 new classification options to the deduction category settings to meet these requirements. The new options will be available in the platform from the 19th of October onwards, and they are as follows: Salary Sacrifice Superannuation and Salary Sacrifice Other Employee Benefits. The classifications are defined as follows. Salary Sacrifice Superannuation. This refers to an effective salary sacrifice arrangement entered into before the work is performed, where contributions are paid to a complying superannuation fund, whereby the sacrificed salary is permanently foregone. Salary Sacrifice Other Employee Benefits. This refers to an effective salary sacrifice arrangement entered into before the work is performed for benefits other than for superannuation, where the sacrificed salary is permanently foregone. Examples include novated leases, gym memberships, and workplace giving donations. Depending on the type of salary sacrifice arrangement entered into by the employee, the appropriate classification must be used on the deduction category. These classifications can be found by navigating to Payroll Settings, then Deduction Categories. You can see the options by either adding a new category or editing an existing one. As mentioned before, there will be links to detailed articles on these topics in the video's description, which will include thorough lists of the classifications.